So we're well run, top down organization, and it kind of helps to know that we're a global organization and not just just running everything locally. We have support across the globe. Now, this is really the big question. I kind of touched on it, but why use ETFs? And to be completely honest with you, I've said it, earlier. It gives you a way to access opportunities that you couldn't otherwise get, right? So if you are just going to pick a stock, right? Let's say you pick any small mining stock. That's well and good. You are taking exposure to that one particular stock. If it does well, you will make money, and you can be extremely happy with what you've done. However, if it loses money, then you've lost everything you put into that one stock. So you need to kind of think a little bit broader and say, right, a lot of things in the same sector might move the same. So if you buy a gold mining company, if you buy Newcrest, maybe some of the other gold mining companies, when Newcrest goes up, might move the same as that underlying, Newcrest might move. So do you just need to take Newcrest, or can you just buy an ETF that buys gold miners, for example, and get exposure to all the gold miners without having any specific risk to that one particular company, right? Now, it might in some way spread your profits across all those companies. However, it also minimizes any of your risk to the downside. So Newcrest might come out and they might have had, they might have had an explosion at a mine, right? You can't predict that, but the ETF will allow you to still have exposure to all the gold mining companies without having exposure to this one particular company. So you're still getting the movement you would get if gold price moves, right? So that's kind of like an example of what you can have. And one of the key things about ETFs is they're completely transparent, right? So every holding that we have in our ETF, you can go onto the website and it's updated daily. So there's no kind of like delays or what's happening. You can see everything that we're doing live. And so through this one trade on an ETF, you can get exposure to whatever sector, whatever part of the world you want, whatever idea you might have, and you can express it in one trade on the ASX, and you can buy it exactly like you would buy any share on the Australian Stock Exchange. So look, that's why you should use ETFs. Now, if you're happy, I'll move on and talk about how you can trade an ETF. And I think, that these are extremely important things to know when trading an ETF. And I'm monitoring all the trading going on a day-to-day basis. And if you don't follow these rules, then your execution won't be as optimal as it should be, right? So the Australian market opens over about 10 minutes in the morning. So the ASX opens at 10 o'clock for only A to B, C. So it opens in alphabetical order. So at 10 o'clock, ANZ Bank will open, but Westpac won't open till about 10:09. So I don't know if people are aware of that. So the market takes around 10 minutes to open fully and in alphabetical order. So for an ETF that holds Australian shares, they can't price it. They can't say at 10:01, oh, right, ANZ's up 1%, but Westpac's not open at the moment. So they can't fully price it. So what happens in that first 15 minutes of the day, the prices between the bid and the ask on the screen are wider. So you should never trade in that first 15 minutes because the quotes on screen can't be tight enough because they don't have all the information, right? And it's really a key point. Now, also added to that, the Australian market has a closing auction. So the market trades between 10 and 4, right? So for those people who know that. So at 4 o'clock, the market stops trading. However, that's not the end of the day. The end of the day is at 4:10. So at 4:10, there's an auction where you can put quotes into the market, and you have all these bids and asks, and they overlap. And there's an algorithm that runs at the ASX, and it picks the mid price between the bids and the offers, and it matches at that time. So anyone who trades a share on the market would know that if you trade after 4, you go into the closing auction, right? And I'm telling you that for an ETF, you don't want to trade in the closing auction because you can't value that ETF in that one little snap that happens at 4:10. So if you're going to trade an ETF, you need to trade between 10:15 and 4 p.m, right? They're the key times for you to trade any Australian ETF. Now, if I click onto the next bit, let me just bring that up. I'll just skip to the next slide. Right. So this is extremely important. So if anyone who goes into the stock market, you will see this order book, right? this is what the ASX looks like. On the one side, you have all the bids, how many shares. So at the top, we have 3,000 to buy at 27.16, right? They're people trying to buy. And on the other side, we have 15,000 for sale at 27.19, right? This is what you'll see on any share. So if you're trading through CommSec or anyone online, this is what you're seeing. So what we want to look at is how you would buy. So even though on a share, if you were looking to buy, let's say you're looking to buy some shares, you have to pay 27.19 if you're buying shares. And if you're selling, well, the price is at 27.16, okay? And that's just literally how any share would work. However, the difference between a share and an ETF is that you shouldn't buy through that top ask, for example, at 27.19, right? That's the price. If you want to buy more than 15,000, which is there, don't buy the price up to 27.20 or 27.26. You shouldn't be paying more than what that lowest price is, because these funds have market makers in them. And these people provide quotes on screen, right? And so because they're always quoting on screen, you shouldn't buy through. They put these extra prices in so that if they clean up one, then they'll pick up more. So you shouldn't ever pay more than that top price, right? And if you want to buy more, right, than what's shown on screen, let's say on this one, you can see that there's like 33,000 shares. I know that's a big order, but if you did want to buy 50,000 shares, it doesn't look like you can do that. It doesn't look like there's enough shares there to buy 50,000 shares. However, with an ETF, they're open-ended. So you can go in and you can actually buy as many as you want. So to do that, you put a limit order in, right? You don't put market orders in for an ETF, because as I said, things are moving and the prices tick on screen, and you can see there that you don't want to pay more than 27.90. So if you're looking to buy this, you put in a price at 27.19. If you want to buy 50,000 shares, that's a lot. But if you did, you put in at 27.19 and you don't pay more. You don't buy it up to 27.38. Okay, that's one of the key things to understand when trading ETFs. Right.
That is really, really good. And for everyone out there, you'll notice that when you do go and place a trade for a share, that you can either put good till close, good till canceled, a limit price, and that's what you're referring to. Just when you place that trade, look at your screen, look at it properly, and yeah, find that price. That's amazing tip, Jamie. Thanks.
No, I think this is really important. And just to be completely clear here, trading an ETF is exactly like trading a share, right? But it's just, you just need to be aware of how you do it and what's best. So I just want to touch on one other rule, and this other rule is about buying international shares, international ETFs, right? You have to think time zones, okay? So in the USA, during our trading day, the US markets are never open during our trading day. Neither is Europe, right? At no time during our days does the ASX overlap with those two markets. However, our markets, the ASX does overlap with stuff in Asia. So in actual fact, New Zealand opens at 8 a.m. our time, right? Japan opens at about 11 a.m. our time. Hong Kong opens about 12:30 our time, the same with China, right? So the information coming out of those countries can affect our market, right? And they can affect ETFs. If you're trading an ETF that holds international shares, then you have to understand that, you want to be buying them when some of the markets open. So if you wanted to buy China, right, a China ETF, you're better to wait for China to open, which is at 12:30, than to trade it in the morning, because at that time, all the information is not available to correctly value those China shares. So it's just something to think about. If you're trading an ETF, you just need to think about what you're trading and what time zone it is, and how you can best affect the best trade you can on exchange.
Trade in the afternoon. That's what it's pointing at. Trade in the afternoon.
Yep.
Cool. So what else have you got?
So they're the tips on trading, and there's one other thing to understand for an ETF, right? And I get questions on this all the time by people who are trading ETFs on their CommSec account or through their broker or anything like that. So the fund is valued at the end of the day, right? We have this thing called a NAV, the net asset value. It's the unit price. It's what the fund is worth on any day. Now, to understand that, it's taken the closing price from every market, right? So to value the fund, the US is closing in our morning at like 7 o'clock in the morning. It has to wait for Europe to close at 2 a.m. It has to wait for the US to close at 7 a.m. So it's the same day. So if we take today, the US only closed in our morning. So the fund is not fully valued until after all the markets are closed around the world. But to understand that, that's what's called the NAV. So it takes all the closing prices. But the last price that you look at when you're looking on screen is the last time that ETF traded. Right? So unlike a share is only its last price. That is what a share price is. An ETF is its NAV, its total valuation when all markets are closed. So if an ETF last traded at 2 o'clock in the afternoon, right, it didn't trade between 3 and 4 for whatever reason, then that's the last time it traded. And then if you look at the next time it trades the next day, it might show that, it's moved 3%. But actually, it probably didn't, right? It's just because between that time it traded, it's showing that movement, but it's not a share. An ETF is its net asset value, and you can get that off the website every single day. That's what it's worth. That's using all the markets, and that's what you should base any of your trading decisions or your performance on to look at how it's performing.
Clever. I like that.
So I didn't want to get too technical, but they're just the key things to understand so that you can actually maximize your use of ETFs.
Yeah, love it, mate. Thanks a lot. Thanks for that info. What else have we got?
Well, that's all I have in terms of tips, all right? Now, I'm just going to quickly click on my screen to see how the US election is ticking, because
I love it.
It's very, very topical at the moment. And it looks like Biden's slightly taking more electoral college votes at the moment. And the ASX 200 is flatlining. It's flatlining now. Okay. So we saw over the last couple of days, obviously, that the US market had gone up a fair bit. And that was indicating, to be honest with you, that there's going to be a definite election, a definite election result. It's not going to be close. That's what that information is telling us.
Looked like the view the market had was that Trump was going to win it.
Well, I was reading a lot of research this morning, and no one was categorically saying that. They were kind of saying, in what I was reading, they were saying there's going to definitely be a solid result, but it could be Trump, it could be Biden. I think it depends on if you want Biden to win or if you want Trump to win. That's where your view is. The worst thing that can happen to the markets right now is if this is a close election. We just do not want a close election. We don't want it contested. We need a definitive winner. Markets don't like uncertainty. It creates a lot of volatility. It might be good if you're trying to trade shares, but you've got to be on the right side of that movement. So for all of us, I think, and the markets and growth, and we want a definitive election result, and it's looking relatively close at the moment. Yeah. It is still early doors.
What will be?
You mentioned this these ETFs being open-ended. Just for us newbies to ETFs, what does that mean? Does that mean that I can buy an infinite amount of units in an ETF?
Yes, that's actually exactly what it means. So the fund just grows. So as money comes in, so as you buy shares on the exchange, right? As you buy more and more of it, the money comes to us, and we go and invest that money into the shares that are held within the ETF. So the fund can grow to billions and billions of dollars. There's really not really an upside to it. So the fund just grows as people buy it,